Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. Today, we have a very special guest. We have Alex Thorn. He is the head of research at Galaxy. So before we get into the conversation, I do want to give a shout out to the Bitcoin company that makes this show possible. Of course, I'm talking about bitcoinwell.com. Help us make self-custody by default the standard in the US, only brought to you by Bitcoin Well. Bitcoin Well is a publicly traded Canadian company that recently expanded to all 50 US states, and it's the first Bitcoin on-ramp in the United States that is self-custody by default. So I definitely recommend checking out bitcoinwell.com today. And they currently have the Bitcoin jackpot contest, where the current jackpot is about 1.6 million sats. You can find out more information on bitcoinwell.com. All right, no more delay. I do want to bring up our very special guest, Alex Thorn. Huge fan of his work. I've just been seeing a lot of his work on Bitcoin Twitter, and you do an incredible job. And it's an honor to have you on Simply Bitcoin IRL today.
Yeah. Hey, Nico. Great to be here. Same thing. Fan of your work. Been watching the show for a while and really happy to be here. It's an exciting time. Things are getting wacky.
It is so exciting. It is so exciting. The volatility today, the Coinbase circuit breaker. I mean, okay, Alex. All right. I don't want to go down any, conspiracy theory stuff, but we got to be real here for a sec. Like, they've had 3 years to kind of work this out. Why is it that Coinbase goes down every single time you have these huge volatility swings? Of course, the conspiracy theorists are like, no, they're doing it on purpose. I don't think it's on purpose. What's your take on that? It's just awfully convenient. It's awfully convenient. I'll say that.
Yeah. I mean, look, I don't know anything about that. I will say that I think it's fair. Some people have said that, we're not in a bull market until Coinbase goes down. So it did today. I mean, I don't know. And look, we hit 64,000. I mean, let's be real. That's practically the all-time high. We like to talk about 69,000 as the all-time high. If you look, like that was on November 8th, 2021, we wicked to 69. In reality, we closed that day at like 67,450, and we were only above like 64 for about 48 hours, right? So I think it's fair to say that honestly, we're basically flirting with straight up price discovery right now. This is it, Bitcoin. I did the math when we were at 58, but of course it's changed now. But there was only like at 50, there was only like 80 days that we'd ever traded higher than that. So, and obviously at 61, we're at right now, like I'm telling you, it's about 5 or 10 days max that we ever traded here. So yeah, look, I don't know why it keeps going down. I'm not a tech guy in terms of building stuff, but presumably it's record logins. It doesn't surprise me on a day like today that a bunch of people that haven't checked their Bitcoin and maybe own some on Coinbase logged in for the first time in years.
Yeah. And I would agree with that. Like the amount of volume, the amount of people that are just going onto the platform just on the same day, it's been, all quiet on the Western front for a little bit. And then all of a sudden you have these last 2 days, crazy volatility. People were waiting for the so-called God candle. Didn't happen in one day, but it happened in two. I don't think a lot of us expected for things to happen so quickly. So what's your take on that? Do you believe that was partially caused because of the Bitcoin ETFs, the overall excitement in the market, the narrative? I kind of have a little theory, and I want to run it by you if you don't mind.
Yeah, go ahead.
So I think last cycle, a lot of people were let down. I think it was artificially cut short by the China mining ban that caused the hash rate to drop by 50%. And then the price went down with it. And that's just because miners had to sell, their equipment to relocate to more favorable jurisdictions. And I think that played a major role in why we didn't hit potentially 100K last cycle. There's no way to know for sure, but that's my theory. And I have a little bit of PTSD because of that, because I think a lot of us had high expectations for the last cycle, and it felt like it was almost cut short a little bit, and you hear this narrative a lot in the community. American HODL talks about it. So what's your take on that?
I mean, I think it's fair. I haven't really considered whether the China ban and the eventual hash rate flight, a lot of it to the US in the summer of 21 was specifically it. But I will say, look, Elon also rugged and caused that first drop down from the 50, 60 area, right? When he said he was removing Bitcoin as a payment option from Tesla right after they built it because he just sort of realized that mining uses electricity, right? I do think it's fair to say that part of the problem with the last cycle was we really just didn't get high enough for the sort of historical math to be congruent with the prior cycles. It made it a lot easier to, for example, there was this old thing that you said, no Bitcoin bear market had ever dropped below the prior all-time high. And I remember saying that and thinking that it was quite bearish that we went below 20 in that, 2022 bear market, 20K, that is. And that probably wouldn't have happened if we'd gotten higher during the bull market. So I don't know exactly why. It did feel like it was, especially given the level of money printing, the run that equities were on after coming out of the COVID market, it felt like we could have gone higher for sure.
Yeah, I agree with that. And again, like there's so many, a lot of people feel like FTX played a big role and this and that. So there's no way to know for certain. But there's something interesting that we were talking about earlier on, and I do want to get your take on that, which is this idea that we're running up way too fast, too quickly, right? You mentioned that you wrote this excellent thread. Opti, if you could pull it up, that'd be great. I think it was this morning. Please correct me if I'm wrong. And thanks, Opti. And so, do you believe that? Like, is this an early top? A lot of people were, I've seen that be speculated on, I've seen multiple videos on this. I've seen people talk about it on Bitcoin Twitter. So why aren't we topping, Alex?
Yeah. I think people have talked about this a lot. I think there's historically, if you look at the Bitcoin halving, we're 52 days away if you assume the halving is on April 20th. I mean, obviously that's subject to block time speculation, but like that's the 10-minute. If we have 10-minute blocks from now until the halving, then it would be around April 20th, and this would be 52 days from now. If you look at the second halving, which occurred on July 9th, 2016, Bitcoin was $455 52 days before that, which was 60% below its prior all-time high. If you look at the third halving, which occurred on May 11th, 2020, Bitcoin traded at $6,174, which was 68% down from all-time high. Today, and by the way, I wrote this when Bitcoin was 59,330. Obviously, we're at 61, so the math's even tighter than this, but 52 days before the expected halving, Bitcoin was at 59,330, which was only 12% down from the all-time high, and it's even less now at 61. This is giving people pause because obviously, I think all your viewers know, Nico, that Bitcoin tends to run into a bull market several months after the halving, not before, not a new all-time high before. And the fear I think people have is that, wait a sec, is this the bull run? Are we speed running the cycle now? Like if we break the all-time high now and start running, does that mean that we won't get another bull run or continue the bull run in the 6 to 12 months after the halving as we have historically? That's the fear. And I wrote this piece specifically saying, no, I am here to tell you, I literally said, I'm here to say, I don't believe that for a second. And yeah, I am saying this time is different. And the primary reason is that the ETFs, by the way, that's also that the ETFs are why we have a lot of room to run purely on flows, but it's also why we've run so hard pre-halving. So it's idiosyncratic, not cyclical, for why we are trading at 60,000 today, right? If all things had been equal, as in no ETFs, then you could see sort of the normal liquidity and halving cycles. Global liquidity is a huge part of it. Rates would be probably what engendered the next bull run. But the reality is these ETFs are vacuuming up coins at astonishing rates, far beyond what I expected, by the way, or far earlier. We predicted in October, we suggested a conservative defensible number for projected net inflows in year one was 14.5 billion. We're already at like 7. So like most likely our prediction will be low. It will come in over that prediction. And I think the reason that we had thought that number was a bunch of work. We have a report on our website. You can see if you want at galaxy.com/research, but was that we viewed financial advisors and wealth management platforms as the net new accessible market for Bitcoin ETFs. That average person, you and I, like retail investors, we've been able to buy Bitcoin for years on Swan, River, even Coinbase, right? Like it hasn't been much of an impediment, for the most part. But financial advisors can't. Like they can't manage a bunch of sub accounts for their end clients through those platforms. The exchanges really don't offer that functionality. And even if they did, these advisors use platforms if they're independent, like Fidelity, Schwab, Pershing, LPL, which are sort of white label like advisor platforms, or they're affiliated with a big bank or broker dealer. Think of like Morgan Stanley, Goldman Sachs, like Merrill Lynch, whatever. Those platforms do not support any real form of Bitcoin exposure. They don't allow the cash futures ETFs. They didn't mostly allow the trust products like from Grayscale. So there was no way. And so we just looked at like the size of that. It's 48 trillion AUM in the US. And we conservatively said, like, if 10% of that capital allocates 1% of their portfolio, then that's these numbers. And then, by the way, handicap, like, well, maybe bank XYZ doesn't allow it in year one. Maybe they allow it in year two, right? We did this whole thing. Point being, though, and it's not just to say what we predicted. And yes, the flows have been astronomical, frankly, and and they're really only trading on brokerage platforms like Fidelity and Schwab. It doesn't mean it's only like small retail investors buying it, but they are buying it. It's also hedge funds and high net worths and family offices. They use those platforms too, but we didn't think we would see this level before the advisor platforms start to turn on, and they really haven't turned on yet. So one of the reasons why this is likely to prolong well beyond, really, like you're going to see a drip over the next 3 to 18 months of these platforms. Again, the banks, broker dealers, wealth management platforms, independent platforms announcing and actually turning on the ability for their financial advisors to allocate their end clients to Bitcoin ETFs. And it doesn't happen all at once. And it, for a variety of reasons, some may never do it. Like Vanguard just says they won't do it. They don't like Bitcoin. Some others don't allow cannabis ETFs. They just don't like it, right? Even though they're totally legal, they're totally regulated products, they just may choose not to. But you will see many of them do it. And it's going to be this phased thing where you're going to get these bullish catalyzing headlines. But it's not just that the headlines are bullish. The substance of the headline is also one that creates flows. And so that's going to take a while. It's not even really happened yet. So the fact that we're, gobbling 10 times the daily Bitcoin production from the miners per day, like for the 21 of the last 22 days in a row have seen net inflows into these products. Like, these things have to vacuum up actual coins and store them in cold storage. And, prices are set on the margin, and 75% of coins are held by long-term holders. So there's really just not a lot of coins. And the only way to make those coins available for these buyers is to offer them at a higher price. And so, that's what you've been seeing. That's why we're up 20% in 3 days. We were at 38.5 just a couple of weeks ago, and now we're at 61. It's a huge run. I think it's primarily driven by this ETF demand, but for a variety of other reasons, and I'll pause here, but I would say that this time, the cycle is just going to be different. You have this giant new complex of demand that did not exist. It's not only going to fundamentally alter the way we think about Bitcoin price cycles, but it will also dramatically impact the Bitcoin market infrastructure when they offer options on these ETFs, which all the big prime brokerages will eventually, most likely. It's going to revolutionize and disrupt the Bitcoin options market. It's going to disrupt the lending market because you're going to be able to do margin and securities lending directly on your brokerage platforms with the ETFs. And it's going to do annoying things, like it's going to change how we assess holder behavior to the extent that you believe things like tracking addresses with certain volumes or certain times of holding, that's going to be impacted because you can buy and sell a share, but if it nets, like, they never move the coins. So even metrics I used in this piece, like MVRV, like, they're not going to work the same. Like, the whole thing is going to get disrupted. And so I think this time really is different. I think the rules are made to be broken. So there's more in that piece. I'll pause here though. But anyway, I think there's plenty of reason to believe that we have a ways to go.
Yeah, and what the famous sailor saying, right? All your models are destroyed. I completely agree. I don't think I actually said this today. We've never seen absolute scarcity before, and Wall Street is getting a taste of absolute scarcity. Gold can never provide that, right? This is absolute scarcity. It doesn't matter if the price goes up, the production stays the same. Actually, not only does it stay the same, it's cut in half every 4 years, and
Right.
there's halving coming up in 2 months. Are you not entertained?
It's
Right?
going to be wild. You know,
it's
we're
gonna
also
be
going to
wild.
get in mid-April, we're going to get these things 13F filings, which a bunch of classes of institutional investors have to file to disclose their holdings, and you can see them by looking up like on a Bloomberg terminal or on the SEC Edgar website by vehicle. So we're actually going to get a crazy catalyst probably 2 or 3 weeks after the close of Q1, aka like week 2 or 3 of April. That's when the halving's going to happen. Of a whole bunch of reporting on who bought these things in Q1, and I'm just guessing here, but I think you're going to see some massive names, pensions, endowments, who knows what. But it's so, I mean, there's so much more that happens now because these things exist. I totally agree. All your models are destroyed. I think, these things effectively represent a wave of new demand smashing against a programmatically scarce asset, of which 75% is held by long-term holders. And many of them, me included, I'm sure you and many of your audience included, are effectively like diamond hand zealots that forged their love of Bitcoin through multiple devastating cycles. It's not even just the asset scarcity, it's the composure of the holder base, which is truly, I mean, like nobody's like dying for their Apple stock, like in general or whatever it is. Like I'm trying to tell the traditional investors, like, please learn about and do not underestimate the demand and love and commitment to the project that is Bitcoin and what it represents among the Bitcoin holders.
100%. And I've kind of seen this like firsthand, because you always have this, right? So, my parents hodlers since 2016, same as me. First 2 years, they're like, you're crazy. Third year, they're saying stuff like end the Fed, number go up, even though if I tell them like to send me a Bitcoin transaction, they'll be like, I have no idea how to do that. But, they start benefiting from number go up technology. And one of my recent experiences has been with my wife's parents, and I orange pilled them, I would say, like, before 2020, but they really started allocating this like previous cycle, and it was really until this, but again, they thought it was crazy, right? And then it was really until this last couple of months, right, that I started seeing the little sparkle, and you're like, oh my God, this is like, so are you trying to tell me that like I can just buy this and not use a traditional wealth advisor, and I don't have to buy real estate? And I'm like, yeah. And they just like, I could see it in their, like, they can't believe it. They're like, are you trying to tell me I could save without investing? And I'm like, yeah.
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 And PubKey tweeted today that, if you pay in Bitcoin, like they just lowered prices across the bar.
Boom.
Right?
Exactly.
I mean, and sorry, to be clear, they haven't lowered, right? Just Bitcoin number go up means, fiat conversion number go down. Sats per dollar goes down. Moscow time goes down.
Yeah.
And it's true. I think that point is incredibly important. Look, the concept of a deflationary currency, and I'm not really like, I don't necessarily, my bull case, long-term bull case, does not require that Bitcoin replaces the dollar personally. I think it has a good shot at being a global reserve asset, or even the global reserve currency for sure. But I do think that, and this is like I think a relatively moderate position within, Bitcoiner world, but I do think that the benefits of a deflationary currency as an asset are widely maligned, incorrectly. I think, we know central banks hate it. Economists hate it. The idea of a deflationary currency, but, savers love it. And by the way, we went to the moon on a gold standard. This idea that you won't get any entrepreneurial innovation if we don't have, 2% inflationary money per year. I just don't think that's true. But in any case, the average person does not have the ability to, or the time even maybe to invest in stocks. I mean, that's how everybody has basically been protecting themselves against inflation, is by investing. And it's just not fair that like you have to be proactive with your money, just so that you don't lose it all, in my opinion. And anyway, I mean, we're not really, I guess if you look on a longer time frame, we're already there. I mean, if you put all your savings in Bitcoin and you didn't need to access them like, very frequently, then it's been a great, fiat debasement hedge, certainly, and investment. But I think when we see the volatility come down, and it will over time as it's much more widely held, especially in these vehicles, that's another part of this argument is like the intra crypto cyclicality. The Bitcoin all-time high in December 2017, then Ethereum is an all-time high in January 2018. Then there's like an alt season. This is because a lot of people are just holding their Bitcoin. First of all, they're not true believers. A lot of them aren't. They like Bitcoin, but they're not like taking it to self-custody or anything. And they have it on a crypto exchange where they can easily transfer it between these things. And they think that they're all good traders. And, I recommend that. But they have done that. And it's caused this like classic cyclical thing. You see it even in mini cycles. Like even in the fall, we have a big run up in October around this gamma squeeze and like the anticipation of the ETF, then kind of go sideways for a month. Well, during that month, I don't know if Bitcoiners know, but like literal meme tokens on every single alt L1 ran super hard, bonk, dog money type stuff. Like, just while Bitcoin was stagnant, right? There's a little bit of a rotation. Well, the ETFs are going to dampen that dynamic significantly because money that like an advisor puts into their end client's account, allocating it to a Bitcoin ETF, it's not adjacent to this rest of the crypto economy. And even if it were, like advisors aren't like day trading for all their clients every day, right? It's more of like an allocation with a periodic rebalance. And so like that intra crypto cyclicality will dampen, but also volatility will dampen because again, they see it go up and down. This is being pitched to advisors, I think, quite sophisticatedly at this point. You're not telling people the Invescos and the BlackRocks and Fidelities are not telling these advisors and that they're going to like make quick money. Everyone is pitching this as a long-term investment, right? So they're not going to look at it that often. They're going to check in on it periodically. That's going to lower volatility, and that is going to result in people being able to buy a lot more of it, right? Because when volatility is high, you have to adjust for risk. If you're like a huge allocator, like a sovereign wealth fund, if volatility is lower, you can actually put in more capital because your risk-adjusted returns are easier, right? Like this, it's in general. So like this has a big feedback loop, and so the ETFs are going to add a lot here as well because it's going to create this. Honestly, they're by definition ETF buyers historically, a lot of them sort of regular people, not the high frequency stuff, but like they are much like longer term than like Robinhood day traders.
Yeah. And that's very interesting how you said it's gonna dampen because that's the flow, right? It goes from Bitcoin to high cap altcoins to mid cap to low cap. It's very interesting. And I agree with that, specifically the way that you explained it. But I have some questions too on the diminishing return. I didn't say that. I did say that, but that's not what I meant to say. The Bitcoin volatility will decrease. So, I mean, again, if you're new to this, if you just arrived on the scene, let's say, you're not a high net worth individual per se, you didn't have the luxury of getting to Bitcoin in 2015, 2016, 2020. I mean, you hear that and you're like, oh man, does that mean I missed the bus? Does that mean, I can't use Bitcoin as this mechanism to change my life? What's your take on that?
I would say it definitely does not mean that. I think obviously it's becoming more capitalized. So, if you bought in 2015 at like $250, then you're not going to see that level of return, most likely, maybe not for a long time. But I would say that there is just objectively a long way to go here. This is still quite a small asset when you talk about capital markets in general. $1 trillion is pretty good, but it doesn't compare to gold is 12 or 13. Like, so, we're getting close, but dude, gold is like, that's low hanging fruit here. I mean, it's obviously better than gold. By the way, the Bitcoin ETFs have seen about 6 or 7 billion in net inflows since January 11th. Gold ETFs have seen net outflows of 3.6 billion. So, and I don't know a single person, who thinks their kids are going to buy gold. By the way, I'm not buying gold. So like, so that's low hanging fruit, and that's like it's like a 10 bagger from here, right? So, that's pretty good returns, by the way, for something that also has a lot of utility. And of course, I like the ETFs in general. I think they have an important role, but I use like multi custodial services for self-custody. Like, I recommend actually getting the asset if you feel you can, and there's a lot of ways to learn about how to do that. I know Nico's done plenty of work on this as well. Because if you own the ETF, you can't actually use the Bitcoin network. It's good for price exposure, and there's reasons why I would own the ETF, and do, by the way, like in IRAs and stuff, and places that I can't put spot Bitcoin. But I would say, look, I think there's a plenty reasonable bull case, and it's much less risky than like low cap penny stock altcoins, right? Like there's potentially higher gains, but like so many of those trend to zero over time. Whereas Bitcoin has basically beaten almost everything over time in this sector. And then also just like when you talk on the volatility question specifically, right? When I say that, it might sound like, oh man, I don't want volatility down, but volatility up, I'm fine with. Right? Like, sure. And I say this on a day where Bitcoin moved like $6,000 or $7,000 in one day. So I am cognizant of the fact that it's still plenty volatile, but on a realized basis, if you look on the post that like we were talking about, I have the chart in there. It's actually in like the subsequent tweet because it didn't fit because of X. You can only do 4 in a post, but like it is objectively down over time. So it has been declining. I think the thing is like the vast majority of Bitcoin's profits, some huge percentage come like on 10 trading days per year. So if you think you can trade in and out of this, you're likely to miss those days. That's one of the reasons why it's important to hodl, right? So I mean, you can see this is on a realized basis. I mean, just look at even the top ticks, right? Like starting in March 2020, like it's been lower highs over and over again, and we're starting to consolidate, down in this 20 range, which is like pretty reasonable. So I think that first of all, that makes it a lot better. Like I said, for investment, bigger pools of capital can allocate. Right now, it's traded like a macro asset, meaning that like there are literally traders who trade geopolitical risk and other macro theses that trade Bitcoin. Like we know them, we trade with them at Galaxy. There's plenty of them, but it's not big enough for you to be like, oh, you know what? Like big rate decision coming. Let's, instead of treasuries, let's use Bitcoin as the hedge. We're talking like $1 billion trade. We're not even close really to that being big enough, for it being big enough yet. But as volatility decreases, you can put more and more in without, while maintaining better risk adjusted returns. And as the ETFs grow, they'll make the overall thing more liquid as the market cap grows, right? So like liquidity attracts liquidity, and volatility is part of that. And like I said, like this is one of the reasons everyone who's been in Bitcoin for a long time says buy and hold, right? Stack sats, whatever the meme is. And it's because we've all watched like Bitcoin go sideways for months and then have crazy moves in one way or another. And while we've come down plenty of times, there's been plenty of downward vol. There's been tons of upward volatility, and there definitely still will be. It's just that, the asset's maturing as it grows and grows bigger, volatility will decline. That's good for everyone.
Yeah. And okay, and I'm really glad that you clarified that. And now another thing, and I really wanted to, because this is really fascinating. You said it in the beginning of the show, and I was just very, very interesting the way that you broke it down. You explained it. This idea that we're not even near close to topping. Man, we're sitting almost at all-time highs. Halving's around the corner. Are you looking for a kind of blow-off type of scenario, 2025, and then 2026 bear? The meme, the American HODL, 3 green, 1 red. Or do you see that breaking because of this? Because the asset is maturing, like you said.
I don't have a strong opinion on this. I would say it's totally reasonable to look at history like American HODL has. I love that guy. He's the best. But I would say, like, I am arguing that it's very possible that this cycle looks completely different. I mean, it's hard to I don't want people to underestimate the magnitude of the amount of capital that can be unlocked by these vehicles and how that will dramatically change price cycle. It's going to change a lot. Like even some of the metrics I used aren't going to really work. Like the whole thing is going to look weird. So like, yeah, I think it's totally possible that even that doesn't happen in the same way we expect. And that could mean a lot of things, right? For all we know, we could blow off earlier and then have 2 reds, or we could have no reds for a while. It's just, I want people to think with an open mind, given the magnitude of this development. Personally, I think it's extreme magnitude of impact on the Bitcoin markets. So I don't have a strong view on that, honestly. Like I just think this time is different, so I wouldn't be surprised if it doesn't play out that way. And in general, like there's just so much. The whole main market that needs the ETF to get access to Bitcoin isn't even here yet. So, I mean, I just don't see how we can be topping. I will say, like, it's healthy. I mean, I was recording my podcast earlier, Galaxy Brains, When we came in, it was 61, got to 62. I have a block clock behind me where I record. I'm pointing because I'm in the producer seat right now, but and it was like 62. It ran to 64 while we were speaking, and when I walked out to get a glass of water in between segments, it was 58. And then when I came back in and recorded more and went back out, it was 62 again. So that's 64 to 58 is $6,000 move. I'm happy to see some consolidation. Like the last 3 days looks like a little too parabolic for my liking. So there will be corrections. There were like 20+% corrections in 2020. Sorry, in 2017. I forget the number from 21, but very common, right? To have plenty of deep corrections. Even just recently, we opened the ETF on ETF day. I think we hit 49K. And then in the like week or two after that, we hit 38.5. Like it's a big correction, right? Like I think we can expect that. I don't want people to expect up only. It's really not healthy to have the asset go parabolic like that. It encourages more steep corrections when that happens. So I think, but I mean, who am I to tell the market what to do? It's really hard to, preach caution when there just is a net buyer of this size. I mean, it's like, I think we're over like 300,000 coins these ETFs now hold. It's like already like, 50% bigger than Sailor. Like, and that guy's been buying for like for years.
And it's absolutely crazy because just Fidelity and BlackRock alone, I already caught up to Sailor. Sailor's been doing that for 3 years, and Sailor did it tactfully, right? Yeah. He bought a little bit along. Wall Street's just like, give me more.
It's just aping. Like, well, they can't even control it. I mean, that's the thing. Like the vehicles are so efficient and they're so available that when people go in and buy the shares, they're just forced to buy. They can't wait for a better time. They have to buy every day. Every day that there are net share creations, they have to go and buy Bitcoin. Like it's what they have to do. There are strategies to minimize the impact, like trying to buy from, I don't know if they know somebody over the counter they can buy from without it. But I mean, like this is exhausting all the amount of demand that these ETFs have is exhausting currently all like tricks that you could employ to not impact the price. To be clear, they don't want to impact the price, right? Like they don't want that. That's slippage. They want to buy and get the best price. That's every buyer does. It's just that, like, again, like the amount of demand we've seen is really shocking. And we're starting to see some asset managers say they're turning on. Like it's just, you're going to see that over and over again. And if we see, I mean, again, our estimates were for, modest but strong inflows from advisors. But like, we just they haven't really started yet. So we don't even know what that's really going to look like. We have our entire estimate's based solely on their behavior. We didn't even really anticipate that there'd be this much interest before they turned on. Yeah. So again, room to go, at least on the inflows, unless we're crazy. And by the way, our model said that 10% of AUM would choose to put 1% in. And that gets us to 15 billion or so, 14.5 in the first year, which would be meaningful. As you can see, 6 to 7 is doing this. So like, or, contributing to this. So, and that, I think that's pretty conservative that like 1 in 10, like we do it by AUM, but like, shorthand, like 1 in 10 clients decide to put 1%. I mean, it could easily be more than that, right? Like this is intended to be conservative.
Of course.
Yeah.
Of course. And in that 1%, like we all know, like we all know what happens. Like you put that 1% allocation, that 1% allocation starts to outperform the rest of your portfolio. And you're like, why not too?
Because if you're doing it yourself, then it's hard to manage that, right? To like not be like, wait a sec, like let's let it ride. Advisors, if they're disciplined, and many are, they will rebalance it back down to 1%. But that also contributes to dampening volatility, because when it outperforms, they sell it back down to get it to 1%. But if it underperforms, they buy it, right? So like that is going to also dampen volatility over time.
Interesting.
You're following a model portfolio, you're targeting a specific allocation, right? So yeah, they'll sell high and buy low, which will help stabilize overall, right?
Interesting, man. The Bitcoin is growing up. It makes sense. It's in its teens. It's 15. It's going to be 18, and
just about to get its like driver's learning permit, right?
Exactly.
Can't drive alone just yet, but like it's starting to get behind the wheel.
So I did want to ask you, Alex, because what you were saying, you kind of buried the lead in the sense of maybe not to your usual listeners, but perhaps to my audience, which is this idea. You said it, and you said it in a way with confidence, and you said, this is $1 trillion asset. I mean, that's just getting started, but trillion, to a lot of people that perhaps don't come from your background, you're like, that's pretty big, right? So what is the total addressable market cap that you see this thing potentially reaching? And I think I asked you this question earlier, but maybe I phrased it a little bit differently. But are people late if the market cap's already at $1 trillion?
For a single asset, like if you look at it as a corporate, I forget there's one of those cool website that like one shows it as a foreign currency, another shows it as like as if it was a corporate market cap. Yeah, it's pretty big. If you think of Bitcoin as money, whether that's a fiat replacement or more of like a commodity money good like gold, it's really not close. There's gold, like I said, gold's like what, 12 times as big, like, and it's useless basically. I mean, you can't even imagine trying to send $1 billion. I saw somebody did $1 billion transaction on chain a couple days ago. They paid $2 in fees, right? It's weightless. It can go around the world. I mean, it's just significantly better for store value and transfer should you need to. That alone is a huge use case, right? And we can get into, right? There's companies like Strike and others that are doing like, cross border with it, or maybe you want it for small payments, small fast payments, micro payments. You're doing lightning related stuff. Like there's plenty of other use cases that change it. But again, if you just think about gold, it's obviously better gold in my opinion. And, don't get me wrong, gold has this whatever, multi-millennia history. But again, I don't know anyone that is remotely young. And by the way, eventually old people die and young people become old. So like that's how new trends emerge in human history, right? Like I just don't know any young people who think gold is something important. Like, and so I really do see it gobbling that sort of commodity money store of value. Then obviously, you can look at things that have monetary premiums, right? Stuff that like people pay more than they really should be worth because there's some market for their value. Think of like high-end art, right? I mean, I love art, so I'm not casting aspersions on the quality of art, but is a painting worth like $150 million? Usually these are highly illiquid assets. Yes, of Veblen Good, Simply Bitcoin points out, that's exactly right. Luxurious items that take on this extra value. And the reality is like, so many of them are looking to real estate's another great example. People are parking capital there, but they're very illiquid. They're hard to sell. They take time to sell. They may not even be able to find a market for them to sell. That helps them create this. And look, art and real estate are scarce as well. So there's a scarcity aspect, but I think it's totally reasonable to start seeing people storing something in a mathematically cryptographically scarce asset that also has this other utility and doesn't have and is liquid, is tradable, doesn't have all this other baggage that the other luxury items do. Honestly, I don't have the numbers in front of me, so I don't want to, but it's so easy for me to see that Bitcoin can grab the store of value use case from a lot of other assets. So, but again, I just keep it simple. Like gold, I think is totally reasonable. We all know that Bitcoin, people call it digital gold. They do for a reason. I won't reiterate that reason. We all know it's scarcity properties, it's monetary properties, it's things like that. I think it's totally reasonable to just look at it. That there's so many ways to look at Bitcoin, but if you just think of it as digital gold, that's a 10 bagger just if it meets gold, right? Like I think that's totally within range. And again, you're doing it with an asset that's, decentralized, resilient. It's in my mind, it's just separately, aside from how the market decides to trade it. Obviously it's been a volatile asset, as I've said. But it's much less risky than like relying on the management team of a company to execute a roadmap and do XYZ really well, or lots of these other types of investments. I mean, I like other things, to be clear. I don't only own Bitcoin, but I'm just saying, like, I think it's really quite a stable, predictable thing, network asset. And so it has plenty of addressable market to capture.
Yeah. And what's the, and again, we don't speculate on our live show. We don't speculate on the IRL show, but I think the question that is on a lot of people's minds is, 10 bagger would be phenomenal. It'd be great. Some people would be life changing, right? what's the timeline here? Like, and especially with what we're seeing these crazy moves. Are we talking about, the end of the decade? Kathy Wood, like her base case was 250K. Her bear case was 250K. Her base case was 648K. And then her bull case was 1.5, right? So, what is the kind of the timeline that you're expecting these things to happen?
I think it's totally reasonable that we I think you're crazy if you look at the action we're seeing and the case of this growing demand and inflows. If you don't think like 100K is in sight this year, I think it's obviously in sight. It's totally possible that it would hit 100K. I think over time, I could absolutely. I think what David Bailey has done the math on this and said that gold's market cap would make it 650K per coin just to match that, right? And the math is pretty simple. I just didn't do it. So I'm trusting David got this right. That's in play, absolutely in play. And 5 years, I'm actually not very good at this type of prediction speculation, but I think by what was it 2024 now? By the end of the decade, that's 6 years. It could be 1 million. It's possible. It's definitely. I'm not going to say it's not possible. I wouldn't really be that surprised. Would I be pretty euphoric? Sure, right. But I've watched this thing enough. It's surprised enough. And honestly, it really is a teenager. The entirety of Bitcoin's history has been, in terms of on and off ramps and trading, has been on the back of startups. Right now, you have it in the heart of really the most deepest advanced capital market in human history.
Is that a good thing? Is that a good thing that it's not in the hands of startups anymore? It's not in the hands of these companies are innovating, that they're trying to create a new kind of system. Is it a good thing that it's in the traditional finance, these established players that have been around for a very, very long time? And of course, I'm a free market maxi, right? Let the free market decide. But I guess, just for the sake of conversation,
I would just say, yes, it is a good thing. But I understand that there's a variety of.
Why do you say that? Why do you say it's a good thing?
Take the ETF wrapper in general. It's a fantastic product. It's truly has revolutionized equity trading, indexes, because it's just actually financially brilliant, the way they operate with the creates and redeems to keep peg to the baskets, and the infrastructure. There's a reason why BNY Mellon is one of the biggest custody banks in the world. Alexander Hamilton founded that bank. It's the oldest bank in America, right? It doesn't make it bad that it's not a startup. So there's plenty of it's not just Bitcoin, but the whole, particularly in DeFi and the broader crypto world, there's speed running all of financial services history. And by the way, they don't know any of it. So they're naming things the wrong thing. And it turns out that thing already exists, but they didn't know that. So and this happens a little bit in Bitcoin specifically also, but the reality is there's plenty of, so many of these types of questions have been painstakingly thought out and answered. Now, Bitcoin's going to change traditional finance also, right? It's not like Bitcoin's going to become a suit and only be able to be used and and by the way, I'd be against it if that were true. I think it's reasonable to fear, for example, people worry about fork choice, or whether the ETFs could support some kind of malicious hard fork or something like that. I think that's extremely unlikely, but it's a reasonable thing to worry about, whether the Wall Street and the traditional finance and the asset managers would try to change Bitcoin to benefit them or something like that. It's certainly possible, but you have to realize too, that's why it's incumbent on Bitcoiners to bring these firms and their personnel into the fold to make sure that they understand Bitcoin. That's why I'm happy to be working on this, right? Inside, right? We work with Invesco on one of the ETFs. This is, we've got, and I know the teams at BlackRock and Fidelity and Bitwise, and ARK. I know all these people, they're Bitcoiners. The last thing they want to do is destroy Bitcoin, right? Now, will that always be true? Look, financial incentives can be powerful, but it is important to spread Bitcoin's message, not just to the buyers and to the hodlers and self-custody, deep Bitcoiners, but also to the rest of the world. This is why I'm so happy to work on this now, because we have the opportunity to tell the story at previously unbelievable scale, right? It's not Andreas Antonopoulos in that empty room in 2012, that famous video.
Of course.
It's now if I can write a report that I can give to our asset manager and they can send to 100 salespeople who can distribute it to like 10,000 investors, it starts to be like, well, we have a chance to tell the real story. We know that the value of Bitcoin is that it is a peer-to-peer, self-custodiable network. It is not valuable if it is a spreadsheet held at BlackRock, right? It has to be a decentralized network operated by users all over the world to have value. That's the core innovation. So I think the issuers here get it, but and this isn't exactly what you asked, Nico, but I feel it's worth addressing. I've talked about this before. People have said like, well, what if they try to like promote a malicious hard fork? I mean, well, that would be terrible, and we'd have to like UASF them or something like that. We'd have to fight back. I mean, but I just don't see any current risk of that. I know the teams at a lot of these people and at a lot of these places, and I mean, they're committed to making Bitcoin as it really exists, like more widely used and adopted. Also, by the way, if you believe in a true like hyper Bitcoinization thesis where Bitcoin is like available everywhere and widely used as money and stuff, like, well, I mean, I don't believe we're going to get rid of banks. So, well, I'm going to need to, the bank's going to have to be able to handle my Bitcoin, right? If it takes over fiat currency, well, okay, like if banks are going to have to exist in those bank accounts, or Bitcoin's going to, I still believe that some people believe that like asset management won't exist. There'll be no purpose to invest. I totally disagree with that. So I'm going to need Bitcoin in my brokerage account. I'm going to need it in, as think about all the places fiat money exists. It's not the same money. Like you got cash in your hand, you got money on a fintech app, you got money, cash in a brokerage account or a money market fund or whatever. Bitcoin's gonna have to exist in all these places, I think, for the most bullish theses to be real. So we've got it's a wall of worry that Bitcoin has to climb as it becomes more widely adopted.
I 100% agree with and even how Finney said it. Like there's going to be, fractional reserve Bitcoin banks. There's going to be fully reserved Bitcoin banks, right? Let the market decide what the market wants to do, But I do want to take advantage of the last 8 minutes or so of the show and talk about the current regulatory environment in the U.S. It was really like me and you that were beating the battle drums.
Yeah.
I think it was like a couple of weeks ago, maybe a month or so ago. But there's been a particular senator who has been pretty hostile towards kind of the industry in general. And you can make the argument, right? It's my opinion that, she's taking advantage of certain situations in order to achieve a certain political end goal. So what's your take on the current regulatory environment in the United States? Is it heading in the right direction? Is it heading in the opposite direction? What are some concerns? What are some things that perhaps, you know that I don't, some maybe things are improving. So what's your take on that, Alex?
Yeah, so you're referring to the Digital Asset Anti-Money Laundering Act introduced by Senator Warren in the Senate Banking Committee. I think it's terrible. I would say straight up, it's a terrible bill. It would apply the Bank Secrecy Act requirements, which is like AML, KYC, SAR reporting, right, suspicious activity reports, to Bitcoin nodes, miners, crypto validators. I mean, self-custodial wallet providers, which are like, I don't know what, the developers of free software. It would require them to basically become money transmitters, even though whole classes of the covered entities don't ever act as an intermediary at all. Think about a Bitcoin miner. They really have no way of knowing like the identity of every sender and receiver of a Bitcoin transaction. Like now, theoretically, you could require them to only accept transactions from previously to and from previously whitelisted entities. Pragmatically speaking, that's basically impossible. And even, by the way, if you did that, transactions between unknown entities, they'd still go into the mempool, and eventually someone outside the US would mine them. So you would effectively crush the Bitcoin industry in America if this were true. Take the wallet providers, self-hosted wallet developers. Like they don't even know who we are. These are free software. Think about Bitcoin Core has a wallet in it. It's free. Right? They don't know who runs it. They could never perform KYC. It's totally nonsensical. And so it's terrible. I would say that this issue, the AML, KYC, like illicit finance use of Bitcoin or cryptocurrencies, has become a hot button topic in Washington following the attacks on Israel on October 7th of last year. And the reality is what the initial amount of illicit finance that supposedly went to Hamas was greatly overstated. But I think after some work, the open source community decided it was about $82 million worth. But by the way, that was mostly Tether on Tron, and it was frozen by Tether and seized, right? So it's not primarily Bitcoin. However, this bill, the senator has repeatedly argued, she was on Bloomberg yesterday, saying that, isn't it totally reasonable to be asking the crypto industry to abide by the same rules as everyone else, the banks, and whomever, the money transmitter? This is a law enforcement issue, she says. Well, I think if you say it that way, it doesn't sound so bad, but let's be real. The crypto industry, including Bitcoin companies that are exchanges, for example, they already do this, right? So who is she talking about, right? Because if you look at her bill, it does not target the industry. It targets the operators and developers of peer-to-peer decentralized software. And that is highly problematic for a variety of reasons. I would say at the moment, that's the only, like, from a legislative thing, likely thing to really get worked on this year, if it even does. For other reasons, the Senate and the House are very busy and tied up. And you got a tiny Republican majority in the House, just not likely to pass anything. From a regulatory standpoint, there are issues with, again, FinCEN has some proposed rulemaking, which is the Financial Crimes Enforcement Network. They do like money transmission regulation and BSA compliance stuff. They're calling for some more like AML KYC stuff. I mean, SEC stuff doesn't really affect Bitcoin here. It's the only asset the SEC has explicitly said within the crypto world that is not a security. So I think Bitcoin is mostly fine here, save for proposals like the Digital Asset Anti-Money Laundering Act, which are terrible, not just for all of crypto, but also specifically for Bitcoin. So those just have to be opposed. I don't think it's very likely to pass, but it has been gaining momentum. When you mentioned that you and I had been tweeting and beating the drum on this, it was because Senator Warren has now added like something like a quarter of the U.S. Senate has signed on.
20 senators, including two or three Republicans.
That's right. That's right. It's a risk. And it really should be opposed. I mean, it's bad law. It's not enforceable, right? So it creates an unenforceable prohibition. You're not gonna be able to stop me from downloading open source software. It's just like crazy. Like it's not gonna work. Even if you do kick the mining industry out of the United States or something, I'm still gonna be able to send a transaction to you, Nico, without either of us. Someone else is gonna mine it. Like it won't have any known effect except for massively stifling American innovation and capital markets, and we'll be banning ourselves from Bitcoin if that bill passes. So
100%.
I think it's terrible from a freedom and liberty standpoint. It's not enforceable, which makes it just objectively bad law. We shouldn't be in the business of passing laws we can't even enforce, and it harms American innovation and pushes value growth and innovation overseas. So it's not great.
100%. I think that was a really, really great way of putting it. So we are getting to the top of the hour, and I do want to be respectful of your time, Alex. If you have any last message for the Simply Bitcoin IRL audience, what would it be?
Oh, man, I would say try very hard to stay humble in this bull market. I'm really hoping, if anyone here, by the way, works in the crypto industry, like, let's try not to have terrible things like uncollateralized lending and try not to, please, if you work in an exchange, do not steal your customers' money. The last thing really, like, the damage from I'm going to be charitable and say unsustainable business models, ranging all the way to what we know, like Sam Bankman-Fried, effectively outright theft. Like, the higher we go, the more penetrated Bitcoin becomes in people's in adoption, right? I mean, the damage can be severe if it is like that. So I don't know, just let's try to, be responsible. Let's try not to get over our skis here. I think that if you're buying Bitcoin and holding it, like, let's just make sure you have an idea of why you're doing it. Make sure you understand how Bitcoin works, have a thesis on what Bitcoin is, and it's totally reasonable to disagree with it with people about what it is. Like, I mean, it's the world's never seen an open source software network, capitalize itself to $1 trillion in value. I tell this to people all the time. How do I value Bitcoin? I'm like, well, I've got several ideas on that, but there is no answer, right? So, I think, again, stay humble, try to learn. If you can, try to take self-custody of your coins. I don't want to push people necessarily to do that. There's plenty of other ways to store Bitcoin securely at this point. Even Most of the exchanges run trust companies now for custody, so which again is like a multi-100-year vehicle, like that has time tested. It's bankruptcy remote. There's plenty of ways that you're. So anyway, there's many ways to buy and hold Bitcoin. Do what is right for you, but I do encourage people to use the Bitcoin network. You can't do that if you buy a market access vehicle in a wrapper like an ETF. Yeah, and just like to enjoy the ride. And I've even given up on like actually trying to orange pill like my friends and family at this point, and because everyone's just got to go down this path on their own, you know. So make sure you are going down the path.
You can only show them the door, but they have to open it. Mr. Alex Thorn, thank you so much for coming on the show. Really appreciate it. Guys, you could follow Alex at Intangible Coins. That's an awesome handle. Really cool that you got that. Alex, thank you so much for joining us, and hope to have you back on in a couple months or so. Appreciate
it. Thanks so much, Nico. Great to be here.
All right, guys, that was our show. If you enjoyed the show, you know what to do. Smash the like button. Consider subscribing if you feel like we provided you value. Guys, I'm going to be at Bitcoin Atlantis. My flight leaves tonight. I'm going to be crossing the Atlantic, and I'll be back on Tuesday. Opti is going to be holding down Simply Bitcoin Live Thursday, Friday, and Monday, and I'll see you guys back on Tuesday. So everyone have an amazing weekend, and Opti will be in the driver's seat tomorrow. Let's see if it goes well. See you guys later.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.